Time now to take a look at some stock picks from the AIM market. In fact, we've also got one as well that's dual listed in the States as well. So let's catch up now with some thoughts on where to look amongst some of these small cap stocks. And we're joined now by Alan Green from Brand Communications. Alan, welcome. Good to talk to you again.
Thanks, Jeremy. Nice to be
Been a long while since we've had a chance to have a chat with you about some of the stocks you're looking at. What is it about the AIM markets at the moment? Much going on?
There is a lot going on. It's been a fairly tough year, but money has been raised, and we're seeing some progress despite Brexit. And we've looked at the market, and you have to cherry pick, but there are some really good opportunities there, and I've bought 4 along today that I hope will fit the bill.
Well, let's start off with your first pick is RAI International. This is the share price as to where we are at the moment, 53 pence.
Yes.
What's this market cap? 92 million?
92 million market cap. The shares are traded as high as 87.5p and as low as 36p on the year. It also pays a dividend too, a dividend of 1.8%. So this is good. The company came to market last year, founded by Lars and Soraya Narfelt, who are both former UN employees, and
right.
They saw a gap in the market to create a logistics company that could service and bring resources, logistics and facilities to remote locations. So the company was floated in June last year at 69.5p. They raised it just under 19 million. Joanne Hart in the Mail on Sunday, in fact, picked up on the stock and said that the company had good long-term potential. There are also ethical dimensions because they were doing a lot of work in Africa as well. And she said she liked the company on that basis. So the company are working with humanitarian organisations, mining organisations, resource companies, and they have picked up a number of contracts. If you look at the chart, though, the shares they didn't fall off a cliff, but they dipped quite a bit last year, at the end of last year. And that was because Soraya Narfelt said at the time, the contracts that we win have a long lead time, and also some of the contracts we win, some of the revenues are delayed, but nonetheless they're there and they are coming in. So the company's progressed since then. Full year results recently, underlying profit up 6%, revenues up 7%, net cash of 27 million in the bank, and they paid a dividend of 1p as well, their maiden dividend. On the 24th of June, the company said it expects financial performance to be weighted into the second half of the year, confident of delivering on that full year. And also the company have won 7 new contracts in 2019 already. So, you know, given the size of these contracts, 10 million, 20 million, you know, that's, for a company that's with a market cap of 92 million, you know, that's quite chunky stuff. So I like the look of this company. There's a floor in the chart, not a floor, a floor in the chart at 48p. Yeah. So that has acted as good support for the stock, and we're pushing higher now. And the company floated at 69.5p, and I think in the near term, given the progress the company is making, it's quite reasonable to expect that it will return to 69, 70p. So that's what I'm looking at in the near term.
What's your relationship? Do you have a position in the stock?
I have positions in 2 of the stocks we're going to talk about today. I have been looking to take a position in this, but simply because I have a finite portfolio. Yeah. I'm invested elsewhere, but this is a company that I want to get invested in. But I should really have put my money in a little bit earlier than now, because I do see some upside from here. I don't think it's going to blow the doors off, but I think this is going to be a nice steady performer, plus there's a dividend yield to boot.
Yep. Okay. All right. Nice little dividend yield there for the first one, RAI International. Cadence Minerals. Now, I think we've spoken about this before. I've certainly spoken about Cadence with the chief executive here, Kieran Mazaria, about this stock. But it's been a bit of an underperformer, it has to say.
It has, yes. Well, the company announced full year results recently, and of course the losses before tax increased substantially. There's a profit before tax of 1.18 million last year, and a loss before tax of nearly 12 million. So clearly the shares have fallen back on the back of that. But the chart makes interesting viewing, as we said earlier. So just to summarise what Cadence do, they are, Kieran Mazaria and Andrew Suckling run what can be viewed as a mining investment vehicle, and they're developing iron ore projects, lithium projects, and other base metal projects around the world. Their strategy is to take a stage in early stage projects, and they sell out at feasibility point or when it nears production. The key projects, Sinovac lithium project in Czechoslovakia, they hold 19.1% of European Metals holdings. and Sinovac, given the news recently about the quality of the lithium coming out of there, is in my opinion set to be the next hub for European battery metals and the EV industry. So 19.1%. The net present value of the asset there is 1.1 billion at the moment. So there's a huge amount of potential. The company also owns 10%, just under 10% of Macarthur Minerals, are listed on the TSX market in Canada. Now, Macarthur Minerals own the Lake Giles iron ore project in Australia, and they recently struck a fantastic deal with Glencore. We have the iron ore squeeze currently across the world, given the Vale tragedy in Brazil. So there's a squeeze in the iron ore price. So Glencore saw an opportunity here to get in, and they've struck a takeoff deal with Glencore, which will be worth somewhere in the region of $4 billion over the first 10 years. So for a company that's as small as Macarthur, that's a substantial project. So they own just under 10% of that. Bacanora Lithium, they own 1.5% of the company that owns the Sonora Lithium project, and they have two joint venture companies there, Mexilit and Megalit. Bacanora also owns the Zinwald Lithium project, which is adjacent to the Sinovac project in Czechoslovakia. Plus, they also have other investments in Auroch Minerals and the Angibana Rare Earth Metals project in Australia.
There's a lot going on there,
Yep.
and I quite often ask this of chief executives about the fact that a company so small has such a wide profile. This itself is surely a worry to investors, that they can't keep going on all cylinders at the same time.
Well, I think that's an interesting viewpoint. I take the view actually that it's safer. You've got a spread of risk here. You've got a spread of risk run by experienced mining professionals. The other project that I was going to just touch on is they have direct projects. They've just the Amapa iron ore project, a mine in Brazil, which is, again, we're back with iron ore again. Anglo American and Cliffs had this mine, and Anglo American valued their 70% stake at 866 million in 2012. They sold the mine for 600 million a few years later. It's currently in administration. Under judicial review, Cadence have an opportunity with Indosino, and they've invested 2.5 million. They've just raised some money to make that initial investment, 2.5 million for a 20% stake in that mine. If they can reactivate that, and there are tailings and there's an iron ore stockpile that they can sell there, then they've got some potential upside.
How long is that going to last? I mean, that sort of could potentially be a long time before they get to the point of where they're going to say it's definitely going to pay money. Well,
Cadence have said that they expect to start selling the iron ore stockpile in Q4 this year. So that's very near term, given where the project is. Indeed, bringing the project online will take a bit longer. But the fact is they've got the infrastructure there. They've got the rail infrastructure. The port needs to be needs some repair work done to it. There was a collapse in the port, which partly prompted Anglo to sell. But the fact is that iron ore is there. There's iron ore in the mine still to be mined. So there's great potential. So I think, to go back to the point you made just now, you've got this range of projects with Cadence. Any one of those projects, the stake they have massively exceeds the market cap of the company at present. Yeah. And that's what I find exciting about this company.
Yeah. Just quickly go back to the chart, explain what's going on here. Great big spike all the way up to whatever that was that we had back in March. It seemed like around about 0.4 pence.
That's right. It was quite an event. Macarthur Minerals announced this takeoff deal, and Macarthur Minerals had a very small market cap. They announced this $4 billion takeoff deal with Glencore. And of course, investors did very quick maths. Hang on, Cadence own 10% of this company, so that should be reflected in the market cap. And there was an absolute frenzy of buying activity, and the shares popped up to 40p. I think they closed at 38p, and then of course came back down because I think a lot of investors that have been in the company for some time just took an opportunity to sell and get out. So Cadence raised some money at that point, and they've just raised money again, as you know, too.
And of course, this is the problem about small cap companies raising money, isn't it? When the share prices go up, it is typical. And that's part of the life of a small cap investor.
It's part of the life, as you say.
Let's move on to number 3. Tiziana, life science Sciences, we're back to £90 million market cap here with this one.
Yes, indeed, 90 million market cap. Now, this is revolutionary technology in any sense of the word. Tiziana are developing, so they are dual listed both on the AIM market and the Nasdaq market. They are developing molecular treatment for human diseases in oncology and immunology. And developing technology like this at molecular level is incredibly difficult. It's once the treatment's out there in the market, invariably the side effects to the patients are realised, and the treatment has to go through many more years of refinement to get to the point where it's no longer delivering side effects. However, their flagship product, forolumab, it's nasal delivery for neurodegenerative diseases, liver disease, and also Crohn's disease as well, several independent peer journals have just been published, and this is a sign of the progress the company is making. The independent peer-reviewed journal for Crohn's and Colitis 360 showed that forolumab is the only fully human anti-CD3 drug without anti-immune reactions. So it really is a breakthrough technology. So these independent peer journals are now picking this up and looking at the company, which is probably about 2/3 of the way through to full approval to be able to actually put this out and start treatment in the marketplace. But where the stock is now, we've had some movements. The stock's traded as high as nearly 150p on the year, as low as 36p. We're currently at 67p. But on the chart, there's rising 50-day moving average support at 66p. So we're in a very good position from a technological standpoint on the chart, and I believe the stock in the near term is going to return to 80p over the next 2 to 3 months, and then who knows from there.
Who knows? Your position?
I don't have a position in Tiziana, but I do have an interest in the company in other ways. So yes, I do have an interest.
Okay, good. Your last one. Now, BigDish. You and I were talking about this as we came into the studio because I'm increasingly seeing headlines about this company, but I'm interested in it because of that more people now seem to be talking about it. Explain to me what it is that's going on.
What I love about this is it's a technology platform that is absolute simplicity itself. It's a restaurant yield management platform, and it provides a dynamic pricing tool for restaurants. Now, we're talking about the South Coast and Brighton they're just about to launch BigDish across Brighton. So Brighton's full of restaurants. You have restaurants there that off-peak have empty tables. So BigDish basically promote their menus out on the app, and they will advertise for up to 50% off the full menu price. So if you want to book a meal at 4 o'clock in the afternoon in a restaurant that's half empty, in you go, there's your code, you show it to the restaurateur, and you get your meal at half price. And I think it's a great idea. But not only that, I see great potential here, because I'm looking at what Just Eat have done for the takeaway industry. I mean, you've got a multi-billion-pound company there that have hoovered up every other competitor pretty well. And if I'm the CEO of that company, I'm looking at this and I'm looking at what happened to Domino's Pizza, and I'm probably thinking to myself, how can I expand? Where can I take it from here? Now, I'm not saying this is going to happen. This is pure speculation on my part, but to me, BigDish would be the perfect add-on for Just Eat. It would be the perfect direction for them to pursue. So that excites me. The CEO of the company is Sanj Nahar, ex-TripAdvisor, very well regarded. He's spoken quite a bit across the network lately. Aidan Bishop is the executive chairman, who's currently moved to exec director. So ahead of this launch in Brighton, they are in discussions with a number of celebrities and well-known and well-known sort of faces to act as brand ambassadors up and down the country. So you're going to see quite a bit more in terms of online promotion.
So you think this is a takeover target, or is it a business in its own right that's going to roll out and take market share from Just Eat?
It won't take market share for Just Eat, but it's in the same area. So you've got the takeaway industry, which is Just Eat, but BigDish is about selling empty restaurant tables. So a restaurateur wants to fill his tables, and he can't. This is the vehicle to use to do that. So based on that, I mean, the shares have had a pretty active couple of months, as you see. Year high of just over 9p, year low of 1.4p, and the company recently raised just over £2 million at 7.2p. So all this activity, their fund management group contacted them and said, we want to put money in. £2 million has gone in, so the company is now fully funded for the next couple of years.
What are they using the money for?
Well, they're using the money for expansion. They've appointed territory managers around the country, and these people are going to go out and speak to restaurateurs and develop it. And then, of course, it's on from there. So they've got a chance to massively scale this up. And you know, I just see for the future that they're either going to blaze a trail in their own right, or they will become a very attractive takeover target. Still worth just £15 million. We've got 50-day support on the chart at 4.66p. To me, the logical price target in the near term is the return to 7.2p, where the £2 million was raised. It's almost a no-brainer, but shares can go down as well as up.
Absolutely. Your interest?
Yes, I have shares in this company, yes.
Yeah. Okay. Yeah. All right, Alan, we'll have to leave it there, but thanks indeed for joining us with 4 picks from the AIM sector of the market. That's Alan Green from Brand Communications.